4th August 2023, Friday, MAO with Kel. Now, Bill Ackman, all right, the guy who made billions of dollars when the market crashed back in this 2020, is now back and he's shorting the treasuries. And the best part of this, Berkshire Hathaway, Warren Buffett is buying. Though this is going to be fun and it's going to be very, very interesting. Let's just watch this right now. All right. Disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, one thing is that just remember what I said in the last MAO, right? I share with you guys there's a very powerful S&P, insane, powerful trend line, okay, since 2020, right? That was a very time where Bill Ackman was shorting the market. So in that particular trend line, okay, if you watch the video, all right, you can see that I shared with you guys yesterday on 2 days ago about this treasuries versus the NASDAQ, right? I said that the NASDAQ and the US Treasury has been going in line since 2020 all the way to 2021 to 2022. Now they've been going in line, but suddenly during the SVB saga, all right, where we saw the Federal Reserve and other funds come in, we saw the NASDAQ basically ballisting it up all the way from 12,000 to 15,000, 3,000 point rally, okay, since March. And the thing is this, at the same time, the treasuries have been going down. This is something pretty awkward, right? So the question is this, do you expect the treasuries to go back up or you expect the NASDAQ to come back down? So more the chances NASDAQ to come back down, right? So the trend line I have shown you now, this most updated, shows a very important trend line that basically captured the high recently, all right? Beautiful. All right, this is the high, and now it's coming down to retest the upward trend line. So the RSI now is very near to the common point whereby usually it will rebound. So kind of believe that, right, S&P 500 may see some support about 4475 region, okay? Around this point itself, there should be some artificial support around this area. So traders, you need to look out for that. And of course, for those who have been shorting together with us, we shorted about 2 days ago and we have made money. Congratulations to those who have listened and made money together. Okay, so now the thing is this, let's just bring into the point about the TWB chart right now. Now, based on the last update as of this afternoon, we can see that S&P trading about 4515 to 4525. Now, the boys indicators are still selling. Last 3 days, they've been selling. The mathematics is also showing selling. The only thing that the general market is still buying. That's the reason why you don't see a big sell-off. But based on our logic here itself, we suspect that there's a good chance to see the S&P trading down to about 4475 region. Okay, so traders, you need to watch out for this. Okay, all right. So that is all technical. Let's look at the fundamental now. Now, last night, the Dow Jones down by 66 points and the NASDAQ down by 17. And of course, the S&P down by 11. So the main thing is that tonight is a non-farm payroll. All right, the market is looking to increase by 200,000 jobs in July, okay? Do take note of this number. And of course, there's a sudden pop in the US Treasuries has weighed the yield, the yield, to be just precise, the yield has weighed down the stocks. So I'll tell you more in detail shortly. But the main thing is that right now we have some earnings coming up. And of course, I'll come to that very shortly. Let's look at the non-farm payroll tonight. The non-farm payroll we're looking at is about 200,000, okay, and the unemployment numbers look at 3.6%. Okay, so my personal take is this. This is my personal take. This number 3.7. I think this will go higher, okay, because you can see that I feel that recession is already around the corner, but of course, again, only numbers will speak for itself. And the non-farm payroll figures, I guess it will go down instead to 180,000. Now, this is my personal take. So let me know in the comment box what you feel. But more important thing is that you can see that numbers are showing a decline since the last 2 times, right? It hit 300,000 back in this June period. But in July, it came down nearly by 100,000. So I suspect the number will continue to go lower because usually when numbers go lower, that means that recession is around the corner. Now, we do know that Amazon and Apple came out earnings after the market close. And of course, we can see that Amazon did pretty well. Their outlook brightened up, apparently, due to the cloud business and consumer sales lifted up. Okay, we all know that. So that's why the Amazon share price has uplifted more than basically up more than $12, okay, after market open, after market close. Yeah, that's good. But at the same time, Apple did not do that well. Okay, the result came out. It was again, the sales has dropped again for the consecutive quarter. So Apple share came down all the way to 186 before now it's trading about 187. So Apple is a very important barometer of the economy. And of course, Apple being one of the top 5 Dow component stock, right? I just feel that this is going to be an important insight that what maybe happen next, all right, which is the potential recession. So let's bring in Bill Ackman. All right, there's some PowerPoint issue. Just give me a moment to fix it up for you guys. Just give me a short moment. Okay, just to bring it in. I think just now I forgot to save the file. Sorry, my bad. Okay, let me just bring something to you. Okay, just a short moment to just do this. All right, so we let's look at the US Treasuries first. Okay, that's very important. Okay, all right, so let's look at the US Treasuries. Now, the US Treasuries has been going down. Now, I've been calling for sell on the Treasuries for the longest of time because I keep on saying that the US interest rate will go higher, and I still stick to my view. I believe we'll see 5.75 to 6% by the end of this year. I've been saying this for a long time and will not change, all right? And of course, you can see right now, because Treasuries and the yield go in inverse direction. So if the Treasuries are coming down right now, wow. So what do you expect to see, right? The yield to go higher. That's something you expect to see. So you can see the huge volume, and a lot of people are actually shorting the Treasury. So at one point itself, people are expecting there'll be no more rate hike. They're expecting the Federal Reserve to pivot by basically cutting interest rate, right? The Wall Street is seemingly saying that, and even like this, some of the CEOs are saying that. But the thing is this, look at the numbers there, look at the volume there traded by the Treasury. This doesn't show, this is done by retailers. This is definitely done by someone else. So it seems that someone is lying, all right? Someone is lying, right? So Bill Ackman, as we know, the guy who is a multi-billionaire, he is shorting the Treasuries, okay? And he believed the yield could hit up to 5.5% soon. And the word soon means likely he's expecting another rate hike in the next FOMC meeting. All right, he wrote a very good article. You can go to Twitter to find it, but no, Twitter is X, by the way, X. Go to X to find it, okay? All right, so on X. Now, basically, he is surprised at how the US long-term rate has been remained in the light of the structural change. In short itself, right, with such a big problem right now, he's just puzzled how this thing is working. We all know that the 30 years itself is actually now, the yield paid out is even lesser than the 3 years itself. It doesn't make sense at all. So the question is this, if this will continue, right, what will happen? So that is where his point of view come in. Now, let me show it to you now in numbers. I should better, okay, something went wrong to my side, okay. Okay, clear my screen. I'll show you now with evidence of what he means, all right? So let's take a look here. Now, this is the US government yield, the 30-year, and you're trading now is at 4.26%. Now, it's kind of near the high compared to what happened in 2022. But the thing is this, the current target whereby people are looking at the rate hike coming in September, 82% is expecting the rate to stay status quo. Only 17.5 actually expect a rate hike. So Wall Street, this side is actually expecting nothing to happen, but the Treasuries are not really performing the same way. So the yields are actually shooting up. And because of that itself, right, we can see right now that the 10-year yields are now really climbing, even though everybody don't expect a rate hike, but the yields is climbing up. So somehow, somewhere is going wrong, okay, going very wrong. And of course, you look at the Treasury yields across the board, you can see the 30 years is at 4.28%, but the 2-year is 4.91%, and the 3 months at 5.33. It doesn't make sense. That means that it's better to basically lend the American government for 3 months and get 5%, then lend it to you for 30 years and get only 4.28%. It doesn't make sense. So somewhere is wrong. That means that the people are getting very worried, okay? They're getting very worried right now. They don't think that this is going to work. And with Fitch coming into downgrade, this is at the worst time where Treasuries need the money, right? So somehow I felt that Fitch knows something that we don't know, right? But of course, Warren Buffett say, no worry about the Fitch downgrade. Berkshire Hathaway kept buying the T-bills, okay, the Treasuries. So he says that, right, it's not to worry about Fitch US downgrade. In fact, he believed that this is a good time to buy. So Berkshire Hathaway bought $10 billion in US Treasury last Monday.
They bought 10 billion this Monday, and of course next Monday they'll be buying the 3 months and 6 months. So of course, if you can buy it and there's a confirmation of actually getting about 5% to 4% in trend, of course it makes sense. And 3 months to get 5%, that's a very good deal, right? So it makes sense to buy. But then again, if it makes sense to buy, then why is this guy, Bill Ackman, shorting? This is something very puzzling, all right? So to Warren Buffett, he said that yes, the concerns are valid, okay? And he doesn't agree with everything the Federal Reserve is doing, but it's not going to change his view on the US Treasuries. And most important, his view is that the US dollar is still going to be the reserve currency, and everybody knows it. Okay, fair enough. But how about the BRICS? Okay. So this is the thing, whether which side you're standing on right now. To me itself, right, I still believe that the rate hike will sort of come in, okay, to 7.75 to 5.6 to 6%. This is my personal view. So if that's the case itself, it's very clear the treasuries will continue to go down. But if the treasury continue to go down itself, right, then the question mark is this: who's buying? And if they don't get any buyers come in, that will be a problem, because that means that the US will get into some big issue. And the only way to get this out itself is to sell away their equities. All right, they can sell equities, by the way. So you look at this chart right now, you can see that the one in candlesticks is the yield that is going upwards, right, over here back in year 2022. The one in blue is actually the Dow Jones, and you can see that Dow Jones actually came down. So this is how it works, right? So now the yield is going up. So similarly, what happened back in just 2 years ago? So by right, the Dow should be coming down. So if the Dow will come down to hit the moving average between the two of them, the Dow should be trading at 33,000. Wow, that's a very far point, because where we are right now is at 35,000. Okay, so for the market drop by 2,000 points, do you think it will happen? Now, it could be really a sudden black swan event that crippled it. And the interesting part is this, okay? The last time when this thing happened, right, for Fitch, who actually downgraded itself back in 2012, it was actually August the 5th. Okay, so this time around it came in a bit earlier, and you know what happened, right? On the Monday itself, there was some selling in the market. So I feel that today, non-farm payroll plus a Friday effect, we may see some selling towards the end of the day. So what do you think? Let me know in the comment box. And last but not least, this is something that we showed you, the seasonal trend pattern. We said that, right, by August, we will see some selling. And indeed, it has basically happened. And the selling should be quite a little bit, okay, until about the mid of August. Then maybe we see a bit of recovery, and then something coming down again back in September. So let me know in the comment box what you think about all this thing itself. Everybody's ended of view. End of the day, as long as you make money, that is most important. All right, please like, subscribe, and share my video. This is Kel signing off. Take care. Have a great day. Bye-bye.